This is Eric Muathe with Muathe.com for the week of July 9th. We see that ended the week, the first trading week of July, with a relatively big down day. We saw the market come and touch the 50-day moving average and hold above that. But now we see the Dow Jones, it's a Dow Jones daily chart. We see the Dow Jones back below this line here, which has been either support or resistance. To a support here, and then has turned into some kind of resistance here. So that still remains to be resistance on the upside. What I wanted to point out here is on the dailies, you see that the market now is forming a double top on the RSI here. Those two red arrows show a double top on the RSI. That tells me more than likely that's a sell signal, and we are probably going to be seeing the market move lower. And that's what I see on the daily chart. Also, you'll see the same setup on the Brazilian market. In other words, you'll see this setup across the globe with that double top on the RSI. Also, you see that the Brazilian market has twice been rejected by the declining 50-day moving average, which net to me sounds bearish. If you take a look at the Korean market, again, you see it's also been rejected by the 200-day moving average and a declining 50-day moving average, again rejected by a declining 50-day moving average. And then we have a double top here on the RSI. Again, to me, net that's a bearish setup and a sell signal in the market. If you take a look at the London market, same scenario here on the RSI. We see that we have a double top forming here on the RSI. That to me seems like a sell signal, even though we see on this chart that this one is, the London market is trading above the 50 and the 200-day moving average. But what I want to point out here is the declining the double top on the RSIs. Also notice that we have the MACDs also showing double top formation here on the London market. It's also true with the Korean market, which I just shared there. Again, you see, seems like we have that declining double top there. Let me bring back the Brazilian market just for confirmation. You see that it too is forming a declining MACD formation there. Also, let's take a look at, again, you see this double top on the RSI. You can see that on the QQQ daily. You see the same setup there, QQQ daily, double top on the RSI there, which is a sell signal. Also seems like a double top on the MACD there. MACD top lines, this line here. So that double top, to me, that's a sell signal in the market. Take a look at the banking index. The RSI is showing a definite double top here. That's a double top on the RSI. That's a sell signal. Also, we happen to be trading and finding resistance on this declining top lines, another sell signal. The RSIs, also the MACDs, are showing double top here on that line, sell signal. Let's take a look at the semiconductor index. You see that there's rejection at the 200-day moving average here, sell signal. If you take a look at the RSI, you see a double top here and here, and also the MACDs are also showing double top formation here. Again, that net interpretation is that the market has seen short-term highs and is going to be pulling back. Take a look at the Dow Transports from a weekly chart now, and you see that the RSI resistance has been taking place here on a weekly basis. We can't seem to move above that line. Also, we can't seem to move above this level here on the price. So we have price and RSI resistance, and unless we can break out of those levels, here's a market that also wants to go down. If you take a look at the Dow Transports from a daily chart, you see that you got this resistance, double top resistance here, which happens to be this line from a break point. It broke there, and this is now resistance on the upside. RSI giving you double tops. This is worldwide, and also as I'm showing you in other sectors, that this double top is everywhere you look. If you take a look at the S&P 500, what you see here is a rejection of this 1363.61 area, which happens to be this former high. The market has for the last 3 weeks been unable to move above this level here. So the S&P 500 has to move above 1363.61 if this market is going to see higher prices. If you take a look at the dollar, which to me is really pushing this market lower, the dollar is now breaking out almost to a 2-year weekly closing high, very close to a 2-year weekly high, now that it's trading above 81.83 of the former weekly closing high. This after a very nice consolidation here. Now this consolidation was very good because it held above this level here, the 81.52. So it held there, nice formation there, and now we see a breakout. That's a very good looking chart formation. It tells me this dollar, if it can stay above 81.83, if the dollar stays above 81.83, expect the world markets to be seeing lower prices. If the dollar is moving higher, you see that gold, this is a 1-year daily for gold. Gold is very close to a 52-week low. That's not good. Also notice that we have multiple RSI resistance level. Also the RSI, yes, the RSI is showing triple top resistance there, okay, which is not good for gold. And also you see that gold is being rejected at the 50-day, at a declining 50-day moving average around this level here. So there's reason to be concerned here. I think if the dollar pushes higher, gold is gonna break to 52-week lows and even see much lower prices. If you take a look at crude oil, it had a nice move here over the last week or so, but then a big drop after that sharp move higher. Remember, I'd say that the crude oil was not going to go anywhere because we have a sharply declining 50-day moving average. We have a 200-day moving average that is slowly turning around. So any rally here was supposed to be suspect. Also take a look at the RSI. We stalled here, which happens to be that high, and now we are back stalling at that level here. That tells me this level here is a short-term high, and we might be seeing much lower prices even to test this level here as far as crude oil is concerned. So the RSI is also confirming that this level here is an area where you could sell, and so this is a sell signal as far as the crude oil is concerned. Take a look at the UNG, which is a gas, natural gas, and you see that it tried to hold here beginning of this year, broke down. So we've found resistance there, tried again here, and now we are being rejected. So there's a resistance here. The only way the natural gas can move higher if it can break out of that level there. But as long as this remains to be resistance, I would expect this instrument to be under downside pressure. So there's resistance on price. Also notice that the RSI has been finding resistance on this level here, sell point there. Now we are back at a sell point there. So as far as I'm concerned, I would say natural gas should continue being under pressure. If you take a look at natural gas from a weekly chart on the RSI, you'll notice that the weekly chart for natural gas, the RSI has stayed below 50 over the last 3-4 years, 2-3 years. As far as I can tell, we've been finding it very difficult on natural gas to move higher, especially after we break down like we broke down here. Happens to be that break there and a 52-week low. We broke down here again, which happens to be this area here, went to a 52-week low, and you see if we turn around here and move lower, this might lead to fresh 52-week lows on natural gas down the road. So I don't see anything that tells me the natural gas is out of this multi-year downward trend. In fact, I have to say it seems to me that we are going to be seeing even lower prices as far as natural gas is concerned down the road. Now, as far as the 30-minute chart for the Dow is concerned, short term, I was noticing that Dow had bounced off this level here, off the lows of the fast trading week, off these lows here. So I think maybe the market is set up to move higher short term on an hour-to-hour basis as the new week begins, but we'll see what happens. We see that the market, again, lots of support levels even here on the MACD. So the Dow might be trying to move higher over the next couple of hours as far as trading is concerned. But month to month, week to week, I still think the market is under pressure, under downside pressure. One thing we really need to pay attention to, and I talked about this on the last weekend video, is if this is a Nasdaq 30-year monthly chart. If we break down here on a monthly basis, this support line here on the monthly basis, if this breaks down, you want to be out of the stock market because it's going to be a massive sell-off. If we break down here, I would say get out because it's going to get ugly. Again, on the Dow monthly chart, you see that if the Dow breaks this trend line support here on the RSI, if it breaks that level, I would not even be surprised to see another crash type sell-off. Again, a break here, serious sell-off, you want to be out of the market, because that tells me we could be looking to seeing drops even as big as it drops close to the 2008-2009 time frame, or at least a drop as big as last year's summer sell-off. So any sell-off here, any break of this trend line here, I would be out of this stock market. Again, just be careful if we see that formation. This is Eric Muadha with Muadha.com. Peace and blessings. Remember, if you want up-to-date video updates, log on to www.muadha.com, and I should be able to you should be able to get access to all the chart formations, live charts, and also all our live breakout picks, and you can also get breakout alerts. Also, if you feel like you need some mentorship into how to read charts, I can share with you all my trading techniques. And if you want to, you can get a hold of me on my website at www.muadha.com, and we can discuss how I can mentor you over the next for a period of 3 months. And usually we can decide on when we want to do that. You pick the time and we can meet online, and I can walk you through some of the things that I look for and some of my trading strategies. So this is Eric Muadha again with Muadha.com. Good luck, peace, and blessings.